You're about to listen to the Yet Another Value podcast with your host, me, Andrew Walker. Today before we get there, a reminder, if you like this podcast, please rate, subscribe, review, really high stars, really high ratings, really high reviews. Wherever you're watching or listening, it helps this podcast grow, spread word of mouth, get more podcasts, all that sort of stuff. That out the way, let's turn to today's podcast. I've got Adam Buckstein on. Adam is going to talk about, it's called Stride. It used to be called K-12. It trades under LRN, Learn. That's the ticker there. You can see a full disclaimer at the end. Remember, this is not investing advice, but Adam has done great work on this. This is a really interesting idea. It's actually, sometimes I have companies on the podcast because I want to learn more about them. The guest says they're interesting. And then sometimes there's companies and situations and setups that I could see, hey, I could see myself buying and investing in this one day. And Learn LRN falls squarely into that category. They're trading cheap. There's the stress. There's a lot of, I don't know if there's a lot of, there are a lot of questions about the business, but I think if you're willing to do enough kind of gumshoe work, you can hopefully start to get answers to that questions. And Adam has, and we're going to talk about that all on the podcast. So we'll get there in 1 second. But first, a word from our sponsors.
This podcast is sponsored by AlphaSense. One of the hardest parts of investing is seeing what's shifting before everyone else. For decades, only the largest hedge funds could afford extensive channel research programs to spot inflection points before earnings and stay ahead of consensus. Meanwhile, smaller funds had been forced to cobble together ad hoc channel intelligence or rely on stale reports from sell-side shops. But channel checks are no longer a luxury. They're becoming table stakes for the industry. The challenge has always been scale, speed, and consistency. That's where AlphaSense comes in. AlphaSense is redefining channel research. Instead of static point-in-time research, AlphaSense Channel Checks delivers a continuously refreshed view of demand, pricing, and competitive dynamics, powered by interviews with real operators, suppliers, distributors, and channel partners across the value chain. Thousands of consistent channel conversations every month deliver clean, comparable signals, helping investors spot inflection points weeks before they show up in earnings or consensus estimate. The best part is that these proprietary channel checks integrate directly into AlphaSense's research platform, which is trusted by 75% of the world's top hedge funds with access to over 500 million premium sources. From company filings and broker research to news, trade journals, and more than 240,000 expert call transcripts, that context turns raw signal into conviction. The first to see wins, the rest follow. Check it out for yourself at alphasense.com/YAVP. That's alpha-sense.com/YAVP.
All right. Hello and welcome to the Yet Another Value podcast. I'm your host, Andrew Walker. With me today, I'm excited to have on for the first time, Adam Buckstein. Adam, how's it going?
Great. How you doing, Andrew?
I'm doing great. I'm actually, as I was telling you before we started, I'm really excited for this one because, sometimes I'll do ones on stocks I'm looking to learn, and sometimes this is up my alley and this is up my alley. Get there in a second. Before we get started, quick disclaimer, remind everyone, nothing on this podcast is investing advice. You can see the full disclaimer at the end of the podcast, so keep that in mind. Adam, the company we're going to talk about today, is it Stride or K-12? I never know, but I believe it's Stride. The ticker is...
No, they changed the name. So it was K-12. And they changed the name to Stride. They rebranded a few years ago, and the ticker remained the same. So it's always been LRN.
The ticker is LRN. Obviously, they're trying to convey Learn. That might give you an idea of what they're doing. Yeah. But Adam, I'll stop rambling there and turn it over to you. What is Stride/K-12/Learn, and why are they so interesting?
Yeah, so basically, Stride is the largest provider of virtual public schools in the U.S. They have about 100 schools in 30 different states. And I think it's important to start with how it's structured, because a lot of people lump them into the for-profit education category, and it's a totally different business model. So basically, the way it works is Stride contracts with independent boards on behalf of school districts and charter schools. So it's about 50-50. And those boards decide, for whatever reason, they want to have a virtual public school, in place of the brick and mortar school in that state. And they will, they'll send out an RFP, and Stride will bid on the contract, and they'll run the entire school soup to nuts. And, everything from teachers, administrations, guidance counselors, laptops, and they'll get the contract. It's usually 3 to 5 years in length, and they get paid by the state. And that's the business model. It's really, K through 12. So it's a totally different product, as you can imagine, at at the younger grades, you need a learning coach. High school is very focused on career readiness. So they have the leading career kind of VOTech type of, online program, kind of very timely, right in the right space at the right time. And they've been doing this for 25 years. They're the category leader. They're 2 times bigger than their nearest competitor, which is a division of Pearson. And
No, that's a great overview. And I'm really glad. I just want to focus on one thing you said there. A lot of investors with as many gray hairs on their head as I'm starting to get are going to remember the for-profit education things. These are the University of Phoenix's, but there were some bad actors. These were for-profit colleges that back in 2008 to 2012 were all the rage, tons and tons of issues with them. So I'm just glad you addressed that first thing. Like this is a different
one other
business
distinction
model.
too, and along those lines is like funding. I didn't talk about funding, but I said it's provided by the states. So at the post-secondary level, it's Title IV funding, and that's a totally different risk dynamic. You have a lot of stroke of the pen risk, which would happen during the Obama administration because you're taking Title IV funding. It's all student loans. There's no student loans here. This is again like tuition-free public school. It's you're right. In the as a citizen of the United States of America, your local municipality provides education. So instead of going to the brick and mortar school down the block or within 20-mile radius, you're instead the state is providing you an option, but there's no financing here. And the big implication is there's a lot less fraud. I'm not saying there's no fraud, but it's just a totally different risk dynamic.
Yeah, for the for-profits, I mean, people remember they were going to literally food courts and they were getting people to sign up these documents and everything. Like this is, hey, you've got a 7-year-old, an 11-year-old, whatever it is. You're sending them to public school. The numbers are interesting, and I want to get to the numbers, but I want to dive a little bit further into the business because I do think that that's critical. Tell me why during the COVID era, everyone, why people were choosing to send their kids to school virtually. But I think one thing as a parent and stuff that pops to my mind is you say, hey, these guys are going to run the virtual school. And I'd say, oh, well, I don't know if I'd want my kids to go to virtual school. I have to stay home and make sure my kid's safe at home. They're not getting the social interaction. So let's walk through why are districts choosing to offer a virtual public school? Why are parents choosing to send their kids to virtual public school? And I'm driving to a few different things, but I'll pause there.
Yeah. So pre-COVID, this was a very niche business. I mean, I was an investor before COVID, and I always saw the potential because there's a certain subset of students that would prefer to go, basically do school from home. And there's a ton of different reasons why that would work for a student. And again, it depends on the age, whether they're elementary school or high school. But some of the biggest reasons that are cited are bullying, I grew up going to public school. There's some people who are just miserable. Health reasons, religious reasons. People are concerned about school violence. There's also practical. Let's say you live in rural New Mexico, right? There's no public school within 60 miles. So this provides an option for you to so you don't have to do the big commute. Now, post COVID, what happened is kind of growing by word of mouth, a lot of people figured out that they just preferred this for, a lot of other reasons. And it's kind of snowballed and it's mostly grown through word of mouth. But, as a percentage of overall student US population, the number, I've heard cited is there's 55 million students that are in the K through 12 system. K-12 is the largest with 250,000. You have Pearson with 120,000. You have some mom and pops, but no one, they're much, much smaller. No one is above 50,000 students. So you're talking about a population of 1 to 2%, probably closer to 1% than 2% of the overall population. And, when people are given this option and this choice, for example, in Oklahoma, 5% of students are now choosing the virtual public school option, which is fascinating. So I'm not saying we're going to get to that nationally, but it just feels like it's very underpenetrated at this point.
But 5% honestly kind of feels about right when you start throwing in all the different factors. But I have no clue. I can't say there's any statistics there. It's just kind of there's 5% of the population will do anything, right?
Well, there's also another thing too. At post-COVID, the big issue you're talking about your young kids, right? It's kind of inconceivable. How could you have your second grader at home online? But a lot of parents are working from home, so now that they can be the learning coaches, some parents even prefer that. They want to be more hands-on and they want to be involved with their kids. So that didn't exist pre-COVID. So now you have this whole subset of people that can be their children's learning coaches, and that's opened up a huge another segment of the population that previously wouldn't have considered this.
Let me ask, you mentioned Oklahoma and they've got contracts, throughout the nation, but let's just use a random Oklahoma. Let's say they've got 100,000 students in the overall school system and they hire Stride, they hire K-12 to run their virtual school. How does the payment kind of work? Is it, hey, every head that goes into the virtual school is what we pay you? Is it a fixed payment, whether it's 1 or 2,000 kids go in? How does that kind of work?
Yeah, so it's the same like funding formula as the brick and mortar schools. Every single state is going to be different. So like the money follows the student, so to speak. So on average, like it's about $9,000 to $10,000 per student per year. And then the question becomes, so like, what if a student starts the school year and then they go back, or they change their mind or whatever happens? So there is like very strict compliance around like called withdrawal criteria, that like if a student is absent for a certain amount of time, so then they're taken off the rolls, Stride's obligate, needs to report it back to the district. Like how they true up at the end, just it depends on the state. But that's part of the complexity and difficulty of executing in this business, because this student population is, they're leaving the brick and mortar schools, so they're by definition already more mobile. They're running away from some, some of them might even be homeless, so that's part of the challenge is, ensuring that like there's compliance and like there's not truancy.
Perfect. Let's go to, this is where I think the debate, one of the debates I've had, but the big debate I heard when I talk to smarter investors here, right? It's the ultimate outcomes, right? They say, hey, this is a business. We can talk all sorts of things. I think once people get pretty quickly past the original for-profit parallels. I think people get past that. There are other questions around that. You mentioned enrollment and everything, but the big question I've had debates with is the outcomes, right? Hey, if you're having 100 people learn from home versus 100 people go in person, I think there's a lot of debate among investors of, are the outcomes going to be the same both socially and both. I mean, I can't say I've had teenage kids yet, but I've got cousins. If I sat a teenager at the computer for 8 hours or sent them in school, I'm pretty sure they're going to learn more at school. So a lot of people have said, hey, I just don't think the kids are going to learn, ignoring all the emotional components. So I want to ask that question to you. Like, what are the results? What are the results of this program, and how do they measure that?
Yeah, I spent a lot of time thinking about this. And so again, like we have to take into consideration that like we're literally talking about 12 grades, right? Like, so the outcomes for a senior, and how you're grading relative to like someone in kindergarten, it's going to be like totally different metrics. One thing, these are like compliant, they have to abide by like, the local state regulations. So like all the students are tested, right? So they all have to take standardized tests. And, what you're referring to is that they don't necessarily test as well as, the brick and mortar schools, although I think it, directionally it's getting better. And, we speak to the company about it, and it's very easy to like write a hit piece about it that like their outcomes are not as good. I think the one thing that makes the most sense, I think is that students that leave, they're quote mobile, they're going from one school to another, like by definition are usually behind grade or underperforming. So the right way to look at it, if you don't want to get polemical, is to like, on a relative basis, when a student goes to he's probably already behind grade level, like, is that student based on their own baseline, like how are they progressing? But I mean, it's tough. Like, their populations, I'm in a lot of these after the blow up, I spend, looking at these parent forums, and like you see, like there's a woman who's like, child, this is chemotherapy, like, and not saying that that's every case, but like, a lot of these children have ADHD. Some of them have like IEPs, which is a special designation that they have disabilities. Like they're running away from the public school for a reason, because they haven't been successful. So you're always going to be able to like, it's kind of salacious, show some like statistic that like they're underperforming the brick and mortar school, but it's not the right apples to apples comparison. And eventually, like, I think the demand from the parents and the students is going to like overcome, the naysayers. I mean, it already is.
No, that was great. But if I can just kind of press you on this point. By the way, it was fun to hear you say IEPs, because my wife is an occupational therapist. So I hear IEPs thrown around all the time. But let me just, I have no disagreement, right? Like it is tough if you mentioned some of these kids might be underhomed or ADHD, whatever it is. It is tough if you've got someone, let's say they're in 4th grade, but they're reading at a 2nd grade level, and you're comparing them to the standardized testing. Like, I have no doubt they're starting from kind of behind the curve, but if you took that fourth grader and who's reading at a second grade level and you put them into this program, like, do they have statistics on how his outcomes would compare to if he had stayed in the same school? Does that make sense? Kind of like a like for like, hey, this guy was 60th percentile, you put him in our thing, and he learned at a 65th percentile or 55th percentile, whatever it is.
No, I haven't seen that. And, my suspicion is that, it's very contextual, depends on the student, depends on the school, depends on the age, right? Like we're talking about like kids literally from K all the way through, through 12. I just think as a final point, I don't know if this issue is ever going to go away, but I think what has changed has been kind of the sea change is like the demand has increased. So like, and usually like, I feel like the regulation follows the demand and, parents want school choice. So they're going in with open eyes. And it's interesting too. It's like, like we grew up in an age where, I went to the local public school and never thought twice about it. And like always, like people are increasingly talking about flexing back and forth. It's like, okay, one year I'm going to be like, online, but next year I'll go back to the school. And like, it's kind of like a different paradigm in education. So I think that it's really like a nascent kind of like, industry and like how it has to be understood. I think eventually, like, I would hope that regulators would have a more nuanced view of it. And I think they have, like, Texas recently passed a bill, which basically in May was like kind of like codifying and like, virtual schools is like just really recognizing that like they're going to be a part of the school system. And like, we have to find a way to work with them because, maybe their outcomes aren't going to be as good as brick and mortar schools.
Perfect. I forgot that question. So let's go. What I was referring to there was, the outcomes for online learning overall. Just to be clear, it wasn't specifically Stride. Who you mentioned, Pearson is the big competitor. 250,000 at Stride to 125,000 at Pearson. How are these companies competing with each other? I'm the state of New Mexico. I'm putting up an online public system. How do they compete with each other? Because if you kind of think about it, if a state is spending $10,000 per student to go to public school, you put that student online, I mean, there's a lot less overhead that comes with it online. So you could imagine this being like, if they're doing it on the same per head basis, there's a lot of margin there. And even if you're kind of taking it down, this scales really well. You're having them learn on online courses, not always with an in-person teacher, all that sort of stuff. So I could imagine this being the numbers say this is a very, very good business, by the way. But I want to talk about the competition between firms when they're competing for these projects, because, when states put up big RFPs, lots of people are going to come out for this kind of high margin revenue.
Yeah. So, you always talk about like, what does the market not see, that perhaps I'm seeing? And I think this is like one of the areas where people don't appreciate how difficult this business is because it is highly regulated. And you're taking taxpayer money. So whenever that comes into question, you have to be very compliant and you have to, there's always going to be a lot of people who are going to be chasing, those government contracts. So I think the bigger players, and like, this is an industry where like, Stride and Pearson are the biggest. The number three is like, a fraction of the size of Pearson. And then the third and fourth are like, fractions of that size. So bottom line is, once you contract with the school, I get the sense that it's very sticky. Not that Stride has never lost a school. Like they have 100 in their portfolio, and like, they're going to lose some schools every year and gain schools. But once you're, already in there, the reason why it's sticky is like, the whole the nature of a school. Like they're, this year they're already like planning the calendar for next year, right? And students want to have like continuity, and you have teachers. That's the other thing too. It's not like people it needs to be emphasized. It's not a piece of software. Like they have 6,000 teachers that they've hired, like this is a combination of asynchronous and synchronous learning. So when you're bidding on a contract, like you just have to be realistic. Like, how are you going to staff up and how are you going to prove to the regulator that you have systems in place that are going to be able to track truancy, which, I think is the Achilles heel. Like that's the biggest thing. Like, are these students engaged in the platform? And no one does a better job than Stride. Of course, when you have a big portfolio like that, there's always going to, you can always shine a light on something. But so I get the sense that it's very sticky. They're not necessarily bidding, contracts, taking contracts away from, other ones. Like they're just growing within their own schools. Like the school, some of them are capped. Most of them, increasingly are not capped. So they don't need to like take away someone else's school. They can just grow within their own school.
No, look, I think the two things that really attract me to this idea, three things. We'll talk valuation in a second. But again, I think discussing the business, particularly here, is more interesting than just, hey, it's really cheap, though it is really cheap. The two things are the stickiness, as you mentioned. Like once you kind of get that contract, it feels like the outcomes would have to be really, really bad because it's hard for me to imagine a district being like, hey, we're going to go virtual and then taking the virtual option away because virtual is cheaper than having people go in person and you're taking the option away. Like it just seems really hard to go that route. And as you're saying, I'm not saying it's impossible, but it feels like the option would have to be pretty bad for a school to be like, hey, we've had you guys for 3 years. You know, the people are learning, the students are used to our curriculum, and we're just going to yank all that away for a new curriculum to save. I mean, I'm sure it's some money, but we're going to yank all that away. That feels really, really tough to me. You'd have a lot of upset parents, a lot of bad outcomes, a lot of upset children. Again, not impossible, but it feels really sticky to me. And because it's so much cheaper than in person, the way these schools districts look, I'm sure is like, hey, it's $10,000 a kid in person, it's $4,000 if it's online. Why are we going to switch to go to $3,750 when it's going to be like devastating for the students? So I threw a lot out there. I'll just let you kind of respond to any point I just made.
Yeah, I don't think the districts, the money, is clearly cheaper. And depending on the state, how much, depends like how much the brick and mortar school, like, but in some states, the difference is maybe only like 30% cheaper, which is, I was kind of surprised when I heard that. But I think the point is this business, like I keep on going back to like executing in this business at scale is very difficult. So like, I think the biggest risk to Stride in terms of these these school boards that they're quote unquote independent boards. And like I've sat in, doing primary research, everything's online. So like every month or every quarter, these boards who just, run the school, like have like, public sessions. One thing you see when you listen in is that there's just like so much complexity. There's so many balls that they're juggling. And like one piece of it is like this IT bit, and like the IT alone, just like, having like an app and having an online thing. And, it's just like beyond the scope of, any school districts or even charter school. It's just like too hard for them to even to outsource it and buy everything off the shelf and then like cobble it together. They don't want to be dealing with that. They're just like, trying to like, they're just trying to figure out like making sure everyone has, all the disabled students are taken care of. Like they have to, that's the thing. Like if you're a virtual school, you don't get a pass. You have to take all comers, you can't say no to students that have disabilities. So like they're just like frying bigger fish. And so as long as the provider is good enough, I mean, look, this whole thing with, what happened with Stride's LMS was like, clearly like a huge whiff, but like, I think it's very likely that they recover from it.
We'll talk about the LMS in a second, remind me, but I just want to hit on a few more points. The other interesting thing to Stride to me is, as you mentioned, like individual schools, it's very tough. But you could imagine, like, once you do the system, right, the app, all this sort of stuff, you record the classes and everything. And yes, as you said, like, it's not all literally YouTube videos. Like there are there are like live teacher sessions as well. But a lot of this is fixed costs, right? Developing the app, developing the tech stack, getting the
curriculum, especially the curriculum is the most expensive part of it. Cause like the curriculum has to be custom built per grade, per geography, like the Texas standards are different than the Florida standards, not dramatically, but like it has to be able to basically, conform to like the standardized test that they're going to take to, so that's part of the.
An interesting, not to bring politics too much into it, but you look at how you're seeing different states like really regulate what can and can't be shown. Yeah. Like you can imagine that there's some legal liability and there's some real customization of the platforms that you create. But actually, the point I was driving to was, I'm not saying this is a monopoly winner take all and like no one else can run these, but you can imagine this probably trends. Right now, it's kind of duopoly-ish between Stride and Pearson, unless I'm mistaken anything. You can imagine how this tends to like 2 or 3 big players. It's like, hey, Andrew and Adam aren't exactly going to go do a startup because the tech costs, the curriculum development, the schmoozing and boozing of the public officials to earn that. Like, I can imagine how this tends towards, let's call it oligopoly. And that's kind of interesting there as well.
Yeah, definitely. It's all about scale advantages and being able to spread that fixed overhead over as many students as possible. For example, Stride, they offer free tutoring for like 2nd and 3rd graders. English language are in, like, I was just thinking about that. Like if you're an upstart, like you can't do that because like you can't afford it. But because Stride has like this huge network and like they can flex this staff of 6,000 students, that's like a goodie that they can offer, when they're bidding on a contract and say, hey, like, we're going to offer this. No one else is going to offer that. And it's almost like, Amazoning effect of the industry. And it becomes just like the biggest ones are able to offer the most, and it's a virtuous circle. I think that's definitely going on.
To your tutoring one, I mean, I could imagine also, if you look at their website, a chess club, right? That seems silly. But if you're doing an online chess club where there's one moderator or, probably a few moderators, if you're a startup getting one school, that's a big expense, right? Especially if, let's say 10 of 100 students signed up for it. I don't know. But if you're grabbing it from across the country, you actually you can flex it across a lot more students. So that's interesting. Two last things, actually. First, let's talk about economic sensitivity, because I can imagine this going any which way. You could say there's no sensitivity. This is public school dependent. It's part of it. You could say there is some sensitivity. Hey, times get tough and states start looking for budgets left and right and they just unilaterally pull level. Or you could tell me, hey, it's counter-cyclical. Times get tough and states say, hey, let's try to nudge some more students to virtual learning where it's a little bit cheaper. So I'd love to just talk about economic sensitivity right now.
Yeah, so it's not, I don't think, I've never heard that it's counter-cyclical, but what I have heard is that I think almost every single year, states, including the great financial crisis, there was a bump up in, what states were willing to pay per pupil. So it just strikes me as recession resistant. It's almost for lack of a better word, it's almost like a utility. Again, that's the social contract that we have in the US, is that if you're a citizen, the government provides K through 12 compulsory education. And in fact, if you don't send your kid, you could go to jail. In Missouri, there was a famous case for so it's a big deal in that, until that changes, and I don't see that changing anytime soon, that's a big deal. So the states, I don't want to get, you want to talk about it being cheaper than brick and mortar schools because of this kid's education, so I don't think you have to come onto that, because it's not really about the fact that it's more efficient, although it is, of course, you're scaling these things and it is a cheaper per student cost, especially in, East Coast and West Coast. But again, it's not, this business is going to do fine in a recession.
Look, agreed. I was more just wondering, hey, am I missing something? And it's actually going to be a little bit more counter-cyclical. But I'm with you. You don't want to just only talk about cost, because again, I think the key question that the smart guys I've talked to here drive to is, hey, can we trust the outcomes here, right? If the outcomes are just as good as in person, then this is a screaming buy, right? If the outcomes, it turns out, are 20% as good as person, I'm just choosing a number, then this is probably a short over long run, because eventually systems are going to say, we can't do this. And if the outcomes, as you said, are very hard to measure, but they're within the realm of reason, they're hard to measure because, people are starting from different areas, it's probably good business. So that's last question I want to ask on the business. One of the interesting things is, if you I lived in Kenner, Louisiana, right? You knew what school you were zoned for. And it was just kind of, hey, if you're going to public school, that's the public school you're going to. Here, they have a little bit of, I don't think it naturally comes to people, I can sign up for the online school. So they have to do customer acquisition costs. They have to go get it. So I just want to ask you, how do they acquire their customers, their students? How do they go about that? And then we can get into the marketing, because the other place, I don't think it's as strong as the outcomes case, but the other place I've heard, and this has reminiscence to the for-profit, is, hey, aggressive marketing to people and maybe they don't know what they're signing up for. So threw a lot out you. I'll kind of pause there.
Yeah. So I think the funnel, they start marketing midsummer, and, I think there's no big secrets here. It's a lot of social media, a lot of Facebook, a lot of Instagram. They've gotten much better at, in terms of they're starting to get a lot more leverage on their SG&A and the top line, which indicates that a lot of the company claims that, it's mostly sold through word of mouth. One student finds out about it. A lot of people still don't know that it exists. They think they know about work from home, but school from home, they're what? It sounds like Ferris Bueller's Day Off. That really exists? But it's yeah, it does, and increasingly it makes sense for a lot more people. And in 10 years from now, that's my bet. I just feel this is a business where I could see being much bigger 10 years from now, more accepted, with the next generation, and look, you brought this up at the beginning of the podcast. What about social outcomes, which is, of course, is critical. So that piece has to be solved for. So there's different approaches. So like these schools do have like some of them, again, depending on geography, will have like meetups, they try to facilitate in-person interactions, but like that's clearly something that needs, parents need to like step in, and it's more important, in the elementaries, high school, people are more independent. They can probably figure out their own. But again, like, I feel like a lot of people who are choosing this option, like this is like they're getting bullied in school. Like that is the number one reason that you hear. I mean, it maybe that was pre-pandemic, but now maybe there's like, different reasons. And it's like socially, like they're just like grateful that they have this option because they don't have to like, meet the high school bully in the hall again and, get their lunch stolen,
You know, and it's funny you say this because again, I do a half day of research, but I'm really interested in this one. So I've got some expert interviews. Bullying is the one that comes up so much, and I actually thought it would be the reverse. I thought it would be the reverse. I thought super rural would be the most likely one, and then religious preferences, learning disabilities, I thought would be another big one. And then I actually thought instead of bullying, it would be like the bully, right? Somebody who's been expelled or somebody who's having a lot of behavioral issues, and they kind of at home might be a more structured environment. I don't know if that's true or not, but bullying came up a lot. Like how free? So I'm just a little surprised by that. And maybe it's because I don't think I was that heavily bullied in grammar school, despite my nerdy taste. Like, it's that common where somebody's getting bullied so badly, they're like, I don't want to be around anyone. I can't like transfer. I just want to do this from home.
Yeah. So like I'm in these like parent forums, and it's just, you see like my second grader, she's miserable. Like she's getting every day, she's either getting physically assaulted or just like, she can't take it anymore. We're going online. Like you do see a lot of that. And look, kids are cruel. I have 6 kids. So
it makes
I'm
me
not
sad that kids
surprised
are
by
cruel.
any of this. Like I just see like, this sibling on sibling crime. And it's just like, you can imagine what happened. I went to public school. It was like crazy stuff happened, but
It makes me sad that kids are cruel and that it comes to that. But I just, as I've said on the pod, I just had my second, and she's just turned 7 weeks old, and it's been rough. And you said 6, and my brain froze for a second. Like all the gears, if you think about the gears turning clocks out, all the gears stopped. A little sand went in there. 6 of them. My Lord.
Andrew, you could do it. It's all about operating leverage. You play zone, and then.
One of my friends texted me, he has 4, and he was like, look, the hardest shift was from 1 to 2. After you go from 1 to 2, it's all downhill from there. So that made me feel a little bit better. But look, I think we've done, I want to go to the numbers in a second, but I think we've actually done a really nice job talking through the different levers and everything. And again, I think this is one where people hear the numbers jump out at you, but I think you have to understand what you're getting. Anything else you think we should have mentioned or we glossed over? Anything we should be talking about?
Look, I'm shocked you haven't wanted to dig into the 60% drop in the stock. I mean, the market is like telling us something.
Oh, well, so I do have notes on that. So what Adam is referring to is in October, they come out with earnings, and I'll let Adam give all the details and everything. They come out with earnings. The stock it drops 50, 60% overnight. A week or two later, this is a $3 billion company. A week or two later, they say, hey, we're coming out with a $500 million stock repurchase. And I think I was getting there when I kept saying, hey, this is cheap, this is cheap, this is cheap. But before we even get to this cheap, why don't we talk about the big blow up in October? What drove that? Why a lot of people think this is an overreaction, all that.
Yeah. So like they're on their fiscal year ends in June because they want to have their fiscal first quarter correspond to like the September quarter because that's when the academic calendar is. So they never.
One of the only good reasons to have an off-cycle fiscal year, by the way.
As your last guest said. So, but it's annoying. So they reported their fiscal first quarter in October because that was the September quarter, and that's where they come out. They never give guidance before. And they come out with like, they figure out like how many kids signed up for school. And then it's like a very transparent, predictable business because like it's a fixed price. And then you have like your census and there's some attrition and you basically know what you're going to earn the rest of the year. So they had given back in August when they reported their fiscal fourth quarter, like even though their policy is like never going to give guidance because like it's still fluid and, over the summer, they're aggressively recruiting. For the first time since I've been following the company, it's been a long time, they kind of said like demand is so unprecedented that like we're going to do at least 10 to 15% enrollment growth, which was, pretty out of character. And I think the market understandably got very excited, but like it wasn't guidance. It was just like, when the count date comes in September, that's what they expected to have. And incidentally, they did. Interesting. They came out. They came at the lower end of the guidance. They printed 11% enrollment growth when they reported in September. But what happened is the CEO said they lost 10 to 15,000 enrollments because of problems with a new IT system, which they had implemented over the summer. And so basically, there's two pieces of software. Before that, they've been doing this for 25 years. They've been using kind of custom built stuff. They decided to upgrade. This is like an upgrade to an off-the-shelf learning management system called Canvas, which is like the best in North America. It wasn't like they were going El Cheapo. They also like upgraded their it's called the Student Information System, which is basically the onboarding. It's a program called Power School. They ran pilots, but whatever. It was disaster. Like
look, everybody says short somebody with an SAP implementation. This is an SAP implementation on the school side, right?
It was so bad that like they totally, like all this momentum that they had experienced. I mean, I was just looking back last year, like I kind of forgot about it. Like this was literally, they were a rule of 40 company. Like last year they printed 24% adjusted EBITDA margins and 18% top line growth. And it was like a breakout year last year. So you have a breakout year, you give the soft guidance, you got a lot of momentum coming into the stock, and then you have a misstep. It's like, watch out below, And so like, we can speculate about, it felt very overdone. Like this wasn't like a balance sheet issue. This wasn't like, allegations of fraud. This wasn't like something existential. So it felt very overdone. Maybe it was tax loss selling. Who knows, right? Like it's very hard to know why it was so bad. My personal theory is that the market, going back to the for-profit education, people kind of like in this industry, you're guilty until proven innocent. And so I've been looking around. Like Bleecker Street came out with a pretty decent short report on Prodosio, ticker is PRDO, talking about like they have a real problem with something called ghost students, and it's like kind of what we were talking about before, like the post-secondary and community schools, community colleges. They get Title IV funding from the government, which basically means the government, and part of the little quirk of Title IV funding is the government pays for the tuition, but they also give you like a $2,000 stipend on top of like the $10,000 tuition. So there's literally crime syndicates that have popped up that enroll false students in these schools, and it's rampant at community colleges. Like I've seen reports, there's a crazy amount of, where they're called stipend skimmers. So they're skimming this stipend, enrolling these students and trying to, but like that doesn't exist in K through 12. There's no stipend, So it's a totally different funding mechanism. So when I see the stock selling off by 60%, like you have to respect the market. And like, I feel like that panic and fear was probably, people think that this is another one of those shady, like for-profit education companies that's going to go out of business. And it just like feeds on itself. And like, but it's still, I'd love to hear your thoughts. Like, that's my best explanation.
No, I think you're right, though. I'd love to get your thoughts on. So around the same time, they lose there's a New Mexico contract they lose, right? Which is, I think it's only 4,000 students. But I'm looking right now, NBC, the news on this like bleeds out over the year. So it's hard to say exactly when all the different pieces come. But, I'm looking right now, mid-October, there's an NBC piece.
No. So by the way, the timing is critical because the New Mexico thing, I was going to get to that. And like you said, it kind of bleeds out over the year. So this whole New Mexico thing, I think the timing, it's important to understand the timing. So there's a school sorry about that. I hit my video. There's a school that they had in Western New Mexico, in rural New Mexico, called the Gallup-McKinley School. It had 4,000 students. And there was a contract, this goes back to April of 25. So there was a contract dispute with the superintendent of that school. There's a whole story. He actually applied for a job at Stride, and then he didn't get the job, and then he filed the lawsuit. So like that's, Stride's claiming there was an ethics violation, but he filed a lawsuit. They lost that school. Now, this is very interesting. Stride was able to stand up another school in the state of New Mexico and like literally took all those students. So it just shows you like how this business works, is that like they have multiple schools in each state. So like in the census, like in the October, the quote unquote miss, that had nothing to do with the Gallup-McKinley School. And okay, so that's ongoing litigation and it's serious. Like we can talk about it and go in, what I think, why I'm not so concerned about it. But I just feel like that was in the back of people's heads, along with like, the short sellers that have come after other for-profit schools. There's also been other short, Fuzzy Panda came out with a short report in 2024, which was about like this COVID funding that they claimed was like representing 30% of Stride's, EBITDA. And it was just like totally wrong. It was just like, it was like 1%, So like, I feel like it feeds on itself. When you have a stock and it's down that much, and it's just like, people are just going to like, yeah, forget about it. I don't want to deal with it.
No, look, again, I think a real, both the real opportunity, a real reason this could be an opportunity, and some of the risk is exactly what you're saying. Like, it is not the for-profit community college schools that were, just rife with all this sort of stuff, but it's very close, right? It's online schooling. You're getting it from public schools. Like, I can see how people are. I asked you a question on marketing, right? I can see how people say, oh, yeah. It gets very close to that, but I did not know that all the New Mexico students enrolled, but also along the lines of the for-profit risk, like you look at the NBC article that I talked about, the headline is, a virtual education company was a lifeline to our rural district. Now they're at war, dueling lawsuits, drawing government scrutiny. Like, you see all that, and you do see the rhymes. And I think there is, like, perhaps rightly, investors are scared of their own shadow here. Like, you hear government suing learning company for outcomes, and you say, oh my God, I was right. It was for profit. It was for profit all over again, right?
Well, let's start with our downside, right? Again, like, I don't want to beat a dead horse, but like, this is actually a very interesting test case in terms of like understanding the durability and anti-fragility of the business model. Like, in the worst case, like, let's say like this they lose this lawsuit, which I don't think is going to happen. If you actually read the lawsuit, there's literally like, I think they have very very strong defense against most of their most of the claims. But like, it's not, they have multiple schools in each state, and so like, that's an issue with one school. Like, I don't see like contagion that like, people who are happy in Oklahoma, like they're going to, I just don't see that happening, that like the boards are going to suddenly say, hey, like, look what happened in New Mexico. And just one other thing, it's important, like, where there's so much fear, like, if you read the actual lawsuit, like, there was like 21 students they claimed that were, that had, and it wasn't that like, Stride was hiding, like these students had like, there's like a certain withdrawal criteria. Like, once you're absent for 10 days, you have to report. And it's like these students withdrew like in October, November, and like Stride told the district in December. It wasn't like they were hiding. They but whatever. It's like, it seems to be more nuanced than like, existential.
One more question on the New Mexico lawsuit. New Mexico, again, one of the tough things with these is everything is not just going to play out along as I said, the data can be cut up a lot of different ways. It's not going to be played out cut and draw. If you get into a fight here, it's going to be a fight at the public school boards. And anybody who's watched one of those YouTube videos knows, like, these public school, it's passionate, it can get heated, all that sort of stuff. The New Mexico, when they break the Stride contract, they publish a deck that says, hey, we gave Stride the contract, we gave them every chance. The outcomes were terrible, all this sort of stuff. How do you, or how has Stride kind of responded to the New Mexico? Like, I'm looking at one deck that says, hey, reading proficiency went from state average, like 27% or something for the Stride students in 2021 to 22%. Like, it's just like falls off a cliff. How have they kind of responded to that allegation from New Mexico?
I think it goes back to what we said before, that you have to use the proper baseline. I mean, this argument is almost like, imagine like, a person, a CEO of a hospital system, and he's like evaluating the different, divisions. And he's like, oh my gosh, look how bad the outcomes are in the ER and intensive care. Like, they had like, look at the morbidity, and like, look at orthopedic. Well, no, like, there's just like a different people who are coming to like the emergency room that are getting like plastic surgery. So like, the students that are coming to a virtual public school, like, they're not like, they're running away from the public school, and they're usually like, if not one grade behind, multiple grade levels behind, and they have other trauma and learning disabilities and everything. So it's like, show me an apples to apples comparison, and then like, we can have something to talk about. But until I see that, it just seems like polemics.
That analogy was so good. Did you come up with that off the top of your head?
Well, that's what happens when you have a big position go against you and you think about it all the time. It's just trying to like,
if I take nothing away from this podcast, and I'm taking quite a bit away, but I'm stealing that analogy. It was so good. Like, yeah, the outcomes at the ER, if you compare them to the pediatrician, oh, so good. But one more thing. I had one bull talk to me and he said, hey, one thing I'm concerned about here is AI risk, right? Like right now, it looks great, but if you run AI for 3 years, say, could you have AI custom generating people programs and like running this for a fraction of the price? I will bias the witness a little bit and say I think they're living in a science fiction world, but I do think it's worth asking the question. You could imagine maybe AI is not writing all of it, but we mentioned, hey, going from Texas to Florida, you need to customize the curriculum. Maybe you get the standard curriculum and AI is really good at customizing it so it brings the moat down. But I'd love to just ask about AI risk or AI opportunity here.
Yeah, I heard a line from the economist Tyler Cowen recently. He said, AI isn't going to take your job. It's the human that knows how to use AI better than you that's going to take your job. So I think it's more of that. Like the AI is just going to make this offering better, but like I don't see how you get around having. First of all, it's regulated. It's a teacher, so like anything that's regulated is going to like adopt AI. The last, because and it's taxpayer funded, and so like I think it's going to be on a lag. But like there's just so many pieces here that like you literally it's an entire school. Like it has the logo and they have cap and gowns, they have graduation. So, and they have guidance counselors. So, and then a big piece of it is the curriculum. Like Stride pays like ridiculous, $60-70 million a year of curriculum costs where like they're constantly upgrading the curriculum and making it better. So, who knows, but like, I feel like it will be a net beneficiary. I think it could probably help them on their COGS. And I think they're going to be able to incorporate it. But like, you're never going to get around having a physical teacher. Like parents, like you go on these, parent forums, like they're calling their teachers, you want to speak to your teacher, your kid's teacher, like, like the kids, it's just like, that's what we're used to. So that, right now we're still trying to simulate the schools that we grew up with. And like, I think that's what, certainly this generation of parents feel most comfortable with. They want like a throat to choke, and, AI is just going to, probably make the curriculum side of it like better. Who knows?
Perfect. We alluded to the numbers here. And as I said, look, we're almost at the hour mark. I think this is one of the cases where I think understanding the business and the talks is much more important. I think that's probably always more important, but here particularly, because let's just jump into the numbers. I think you'll hit people over the head really quickly with the numbers.
I mean, where do you want to start? Like, I mean, it just...
You pick.
I mean, look, I think what's most interesting, it's just like it gushes free cash flow. I would point to two things. Number one, like free cash flow, you could just look, I just use like TTM, like free cash flow to EV, and it's like, it's solid double digit. But again, remember, this was like a Rule 40 company last year. So that screams way too cheap for me. The other thing I would point out is in terms of, operating leverage. I feel like, they've done an amazing job on the gross margin. They've gotten really good, like 5 years ago, like gross margin was like in the low 30s. Now it's in the high 30s. Adjusted EBITDA margin has like almost doubled, in the last 5 years. So basically what you're seeing, and like just to like, what's going on there. So like in 2018, someone just showed this to me. They had 75, they roughly had, call it, 2018, they went from 75 schools in 30 states. They really haven't expanded the states. It's basically red, blue states, except for California. So they had 75 schools in 30 states. And last year, they added 25 schools, so call it 100 schools in 30 states. But like they've 2x the amount of students, more than 2x the amount of students that are enrolled. So basically what you're seeing is that they're just getting a lot more efficiency. Now, they are constrained by, there's certain like student teacher ratios that like each state has its own. It's obviously going to be higher than a brick and mortar school. But the point is they're showing you that like, the flywheel is working. They're able to spread the fixed costs against a larger and larger base of students and generate, better economic returns for shareholders.
No, that's great. I mean, that's great. But the numbers I was really hitting to is, look, this is a $3 billion market cap company right now. The stock price is approaching $70 per share. So roughly a $3 billion stock price. If you go to the most recent completed fiscal year, $425 million in CFO cash flow from operations, about $50 million in mainly capitalized software expense, right? So that's $375 million, and that is free cash flow to equity, right? Distributable free cash flow to equity.
That's what I use.
Yeah. So you're buying it for 9-ish times free cash flow to equity. They have about as much cash as debt on their balance sheet, maybe a little more cash than debt. So 9-ish times free cash flow to equity, probably cheaper than that once you do the cash flow. I mentioned $3 billion market cap. They're buying back $500 million of stock per November after the big stock drop. And as you've said, until very recently, this was a business, they have a slide in their deck from before. This was growing 18% per year over the past 5 years, right? So not only is it trading sub 10x free cash flow to equity, it's growing. So you get like the double, if this returns to growth, especially, you get the double whammy of great business, growing crazy quickly, trading at a 10% free cash flow yield, buying back stock. I mean, that's what you dream of as an investor, right? Yes. That sounds like a green black special situation.
Yeah, that's exactly right. I couldn't have said it better.
We've covered a lot here. Let me end with this question. Every business has risks. We've talked about a lot of them. What risks do you think the market is overestimating here? And what risks do you think the market is kind of underestimating that keeps you up maybe a little bit more at night than the average person who's looking at the stock?
So I think overestimating that like kind of the growth algorithm has been broken. I think that now this year, I'm not making a call like on next quarter's earnings, it could be we're going to have to wait until the next school year because there really was an issue. Like you said, you should always short the S&P implementation, and that's exactly what happened here. But I feel like, I just don't buy it. I'm seeing so many other data points that point to like the health of the underlying market and demand. And so like to think because, they missed one school, it was just a quarter, it was the whole year, that would call into question the entire opportunity just seems like overdone. On the other side, like the risk that keeps me up at night, I think there's always, look, it's always, I think it's execution, again, this is like a regulated business. And I feel like ultimately it benefits those who are bigger and stronger because it just becomes a game of regulatory capture. But Stride will only survive. I want to invest in something that's high quality and durable. And this goes back to the point about, your friends that you're speaking to about the outcomes, and mostly it's compliance because kids have to be in school. But if you're straight, legislate, you want to make sure are these kids actually logging in? Are they participating? Are they being tracked? And so I feel like Stride is doing a better job of tracking them than anyone else is. But that doesn't mean that it's tough. That's the dynamic in school. Everyone's trying to cheat the system, right? That's the nature of it. But I think they're doing a better job than anyone. They're certainly spending more money at it, right? No one else is coming close to their level of reporting and systems and compliance.
I don't think this is the case at all, but one risk that does keep me up a little bit is, when Carvana, when it looked like they were going to fail, right? It was hey, every online seller of used cars has failed. And when it looked like Carvana was going to fail, I think the answer would have been, hey, you just can't make online selling of used cars work for XYZ reason. I don't know why that was. Maybe Carvana should have failed, maybe it didn't, but I don't know why you couldn't. But there are some businesses where hey, you just can't do these economically. And I think one risk that would keep me up I think they've disproven it at this point, but would just be, hey, Adam and Andrew talked about all these reasons why virtual is important, doing online, all this sort of stuff. But maybe you just can't make the outcomes resemble anything close to what in-person is. And even if that's the case, as we talked about for the bullying, for the rural purpose, for the religion, maybe there's still reasons to do it. But that would be the one thing if somebody came out with a definitive study that said, hey, unless you have such overwhelming health concerns, you have to. The outcomes are just so much better in person. You just need to send your kids in person. That would be kind of the one thing I would worry about.
Yeah, no, I hear that. I mean, I think at the end of the day, I heard a blogger, just to bring a reference from a totally different industry, was talking about cannabis reform. And they made the point, which I thought was, very insightful, that demand drives regulation. And so he was talking about Trump rescheduling marijuana to, and so I was thinking, as long as the demand is there, so then I feel like the regulation will catch up with it. And so, if I can leave you with anything from my primary research, is that like there's just a ton of demand. Like there was a bill in May that Governor Abbott signed in Texas, and like the lead sponsor, he basically said that he thinks that virtual public education is going to like double in Texas, to from like 52,000 to 100,000, from now until 2028. Like that's just like one data point in a very important state. That's like I think one of Stride's most important states. But like I just feel like as long as the demand is there and like parents are going in with open eyes and students are, and like like that will eventually win out over this legitimate argument. But like it's kind of not a legitimate argument because it's like it's somewhat polemical. It's trying to stick it to the virtual public schools. They're enrolling weaker students. It's not fair.
I like how you described that. And the other thing that strikes me is here, like, look, it's passionate voter groups is what you want to worry for. And let's hypothetically say I'm sending my kids in person no matter what, right? I don't care if you have a virtual policy or not. But if you want to send your kids virtually and the district is not allowing you or they're not funding it, you're basically a one issue voter, right? So you've got a small, let's say we use 5% way early in the even if it's 5% of the population, if you've got 5% that is voting almost as this is a one issue voter, like what politician in their right mind isn't going to do the calculus and say, oh my God, we need to make this an offering, So I think you've got that. Oh, one last question. Sorry to spring this one on you, but it was something I thought of. Teachers unions are very, very powerful, right? And one area I could see pushback is a teacher union saying, hey, you're basically going to, I don't know if they're unionizing the jobs at Learn or not, but there's going to be less teachers per student online, like there has to be. Is there any union pushback to doing this?
So 2 points. Like since I've been following, that used to be a huge issue. Like that, the unions were very against this and very against school choice in general. I think that like totally changed after COVID. It's like it's almost like this was, a must-have. Like you have to have like a reasonable virtual online public school option. God forbid, like COVID happens again or whatever it is. So like I think that kind of like quieted the teacher unions, but they're still lurking there. Like they're very political, they're well funded, and they're very against school choice. The second point I would make is, Stride actually does have some unionized teachers, I think in California. So it's not like it's totally not unionized, but that's a real concern. Who wants to have enemies? But like it's just a reality. This is controversial.
Perfect, Adam. You've done great work. I don't know if we mentioned earlier or not, the finalist for the SumZero Idea of the Year award with this very pitch. So if people are listening to that, they'll get a preview. But congrats on that, man. That's awesome. I think you should win. I don't know anything about the other two, but I think you should win.
Thank you.
But we've covered a lot here. Just last thing. Anything we didn't hit? Anything you think we should hit harder? Anything else?
No, I think that was right.
This was really good. Again, you did a great job with this idea, super well thought out. If nothing else, I'm stealing the outcomes in the ER office are worse than the pediatricians. But this was awesome. Thanks for coming on for the first time and looking forward to having you again in the near future.
Great, thanks.
A quick disclaimer. Nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.